kind of sense is prevailing in the bank on that. So I guess there will be some typical areas which still, management would like to keep controls on. For instance, I don't want to say anything, but the core banking system is capable of doing NPA calculations on an automated basis. But if you do some sort of a study, I think you will get some surprising things to see that, as he rightly said, the year-end adjustments and all are being done manually on that account. Similarly, in treasury, the exotic derivatives and things where the underlying has to be looked at. Again, once again, it can be defined very nicely in the core banking system in the treasury products, but you will find a lot of manual interventions taking place. So these are some of the key controls where I think stat auditors will be concentrating around, and rather than leaving the rest of the things to the management. This is my personal view, and I think I don't want to say anything on behalf of anybody, but I thought this is what I thought I'd share this with you.
It's fair. I'll just take you to the other end of the extreme where Mahesh is involved, where the regulation on the kind of operations which he oversees is not as visible. I wouldn't say it's not there, as visible as in the banking financial services sector. We have projects, remote locations, monitoring to be done from maybe a central office sitting somewhere, multi-layered offices. So there do you feel this challenge of audit fatigue, or even kind of an awareness to be created at those line managers? Look, that this aspect will also now be seen. I'm not just talking about ICA, but I'm talking about IFC also.
That challenge would actually come up, but it's a question of how do you sort of educate them or make them more aware of what is the importance of the topic that is under discussion. Yes, meaning we are a very complex organization in the sense that we have 180 projects running at any point of time across India in locations where possibly sometimes phone does not work, and then you have to operate on SAP. So there are those kind of challenges. So, and then the people who work there have responsibilities which are related to the project, and they do not understand compliances as such. So you have a civil engineer who is supposed to be filling in earth and creating a structure. For him to imagine that there is something called company law and to work on it is a big challenge. So that level of education has to, training and education has to go in to make him aware of that and make it easy for him to understand. And the whole challenge of the management is how do you get them to put the information into the system? How do you get them to behave in a particular manner with respect to certain processes? It has been a challenge. We also went into an ERP implementation some time back. And again, just like you say, audit fatigue, there is also this, system change fatigue is also there. Now, they were used to a system, now 10 years later we have changed it. They are readjusting themselves to this environment. Interestingly, what we did since we were looking into this topic some time back, we looked at the level of controls that are required, and we finally were able to, in the total scheme of things, the number of controls that we found, we decided that, we did not decided, but we agreed that around 40% of the controls could be system driven. So you cannot do 100% out of the system, from the system. So 40%, roughly 40-45% of the systems are now report driven. So you drive some report, run some reports, make sure you check them, and then 40 to 50% of the controls are taken care in that manner. There are others, 40-50% of the balance, which we are exploring how to automate, because this is a process which has just started as well. So it's a learning process and it goes on. Basically, now out of this rest 50, how much of it could be automated, how much will have to remain manual is a question that we have to address. And we finally find our path to the way we want to go, basically.
Yeah, it's going to be a challenge in any case. Yeah. I'll now go to the small, medium enterprises, which is there, in which a lot of people over here also are keen on understanding. I'll start with you, Sairam. I mean, the guidance note does give examples of what's to be done in case of a smaller enterprise. We've learned from college days that there would be alternate controls over there. I'm saying you can. There are good entities, small, medium entities, where the promoter really drives it and there are good control systems in place. But obviously they will not be documented, and they're aware, the promoter is aware of how the entire finance flow happens, how resources are allocated, how they are used. But now when an auditor over there or even the company has to demonstrate again through its own declaration that I have these systems in place. The definition talks about policies and procedures. I may not have a policy documented, but it's all there in my mind. It's there. It's a husband and wife team. It's a two-brother team. They have allocated responsibilities amongst themselves. Everything working fine. So In that kind of a scenario is one thing. Otherwise, where there's nothing, there's no awareness. But yet now you need to educate those entities and say that, look, this is the reporting which I need to do. I mean, any kind of thinking which went through while drafting this, or even otherwise, I mean, not necessarily, I'm not relating it to the guidance one.
Actually, that is a big challenge. So, as indicated in the guidance note, we are drawn heavily from the guidance given by the PCO for small enterprises. And we tried to put that in the implementation guidance, the IG 19 section.
Yeah.
Will have all of it. But at the end of the day, this guidance note can only be principle based. I mean, at the end of the day, it can only be principle based because it has to be dealt with on the ground level, and you can only give certain examples. But I actually would like to mention that, though I had mentioned that there would be a challenge for small and medium enterprises, I think there may be a challenge in terms of looking at it from a different eye of the formal process. But let me actually step back and look at it. You will actually find, perhaps, that the small and medium enterprises know their profit on a day-to-day basis. Okay? And if somebody really wants to know, and at that level of owner-driven monitoring, right? If I were to look at it, it's a different thing that they are forced to do accrual accounting, but cash is king. He knows what is in his pocket or what should come to him. Right? And his ability to remember and follow was tremendous. So I would think, when you look at the process of understanding, that is why what we will have to do from an audit angle, there are two parts. One is the company has to do something, but you yourself as an audit angle are what are you supposed to do? You're supposed to understand the processes, which will go through a process of inquiry. You will have to record the process of the system, and then you will have to then determine what are the controls that are there. And you would test them based on underlying documents. So while the process may not have been documented, through your discussion, you can generate your own, what I will term as audit working paper notes, to record a system flow, which is what the guidance gives in terms of how to record a process flow. You will then evaluate it because as far as underlying documents are there, you will find them. Because you had them even for your statutory audit. What you did not have is the means of probably reaching that underlying document. Right? The other thing is that in all these places, why that alternate control becomes very critical is, you could probably do in many of these places a question of physical verification, right? An observation. Your ability perhaps might be that even though there's no segregation of duty, which you might fail him on, right? You may find that the way he's controlled it alternatively by virtue of the review at another level is compensating. So your eye has to be in terms of identifying that compensation. And it's possible. Because at the end of it, right, one aspect is there. In any system, including a large company, you will always have, in fact, the risk of management override is the most significant fraud risk. Okay? So if you look at it in a small company which is owner-driven, he takes the decision, but it may not be an override. Because he is the decision maker, unlike a management override. So you've got to understand the process. And so I think that it's more a question of really getting into the shoes of the owner in the environment or that management in finding a way.
So we really identify what would be the risk appetite of that owner-driven company and then go ahead and
and then therefore the larger issue comes up frankly is you're driven entirely therefore in your assessment of the owner's integrity. It boils down to that. Because once that is established, then you will be able to rely a lot on the verbal statement, which you convert into a written note, which you then validate through underlying transaction, because finally it finds a place in your books of it.
Right. That's true.
But if integrity is gone, is gone.
Just can I?
Yeah, sure.
Just one addendum. Sairam is talking perfectly, and this is what will happen in this SME and small kind of companies. And this is where I think I made that initial statement. What has really undergone a change, except for the documentation? Because I think since age-old time, the small timers were getting audited. Our own statutory auditors, the institute members were doing the same thing. They were exactly doing what you are talking about, getting the judgment, getting the things. It will now only add on to that documentation which is required on that account. So there will be a management representation later that you require. you will have to put that kind of thing. So it's more a documentation rather than the thing. So I believe, and this is what I said, nothing can change except the form. The contents remain the same, especially in SME related part. This is my opinion.
Rohit?
I think just building on, if you were to look at how JSOX evolved from SOX, and I think it's a good example to look at, because they cut down on the entire scoping in JSOX, and they said it's the only important thing is order to cash, the revenue part of it, and we'll have some high risk accounts which we'll look at, which again gets into the judgment part of it. If you're looking at, for example, assets, I'm not worried about physical stock take, but I'm more worried about the impairment. So I think things which require judgment, estimates, and if we move them, as Sairam correctly said, more into the zone of what are the review procedures, what are the reconciliations, and I think inventory is a great example. Before I receive the material and I start using it, there are at least 12 to 13 transaction controls which happen. There is a gate receipt note, there is a QA, there is a quarantine, then there's user's decision, then there's warehousing. I don't need to bother about all of these. If I had once a year, I do a good physical stock take and I reconcile. As an auditor, I'll be very comfortable. Someone tells me physical stock take done, all adjustments posted. That's the mother control. And if you were to think about these controls, for any small enterprise, these would not be more than 50, maximum 60. And once you've gone through the first layer of discussion and told the teams, this is what I'm going to ask for, this is what you need to produce for me, this is what will give me comfort. You look at budgets, you look at last year's data, you look at your trends, just please make sure you, once you've done the review, you take this off, 2 of you sign off and you put it into the file. I think you do these simple steps with 50 checks. And this is, I'm telling you from experience of SOX. When SOX was extended to subsidiaries, which was one of the questions which came up in CFS, do we need to do full SOX? None of the companies did full SOX. Everyone went in with a light approach. The light approach was based on big risk items, provisions, and just focusing on these 50, 60 important things, and that's about it.
Hasmukh bhai, for you, just arising out of this, do you foresee, especially in these small medium enterprises, that this kind of reporting will be commoditized? I mean, not talking anything on how an audit is done, but year one, in all enthusiasm, this will get done, and thereafter it becomes a commodity. I mean, do you anticipate that happening? Or even in those small businesses, and some of them are real complex businesses, where a business process changes and again the auditor would come and have a relook, and that kind of interaction would increase. I mean, where the auditor plays much more of an advisor role also.
The question should be asked for the statutory audit itself, whether over the years has become a commoditized. I mean, both the quality of the audit as well as quality of the organization about improving their own processes. So again, here also, as was rightly mentioned, tone at the top, the entrepreneur who is driving his own intentions of evaluating or seeing the value in all these processes is of utmost importance. So, apart from this question, I may be digressing as far as SMEs are concerned. IFC or audit, for that matter, has to be completed within the overall environment that you are operating in. So, some SME enterprise, say for example, is a builder developer. Now, obviously, there would have to be some transactions which are kind of from whichever way you look at it, audit risk. On that, such kind of entrepreneurs have a better control than what our audit processes can really, get a comfort on. So therefore, I think commoditization, yes, it will depend on the promoter to promoter, business to business, and auditor to auditor as well.
Any other view on small? And I'll just go to the next topic which I had was on again entities where you deal with outsiders and whether this entire control reporting goes to them. My vendors, my distributors, whether like something like in Foreign Corrupt Practices Act, for example, which you are responsible also for the vendors' behavior. So under this IFC, I'm more on IFC than other than ICFR over here. would you say as an entity that okay, my vendor should have behaved like this, or my distributor should have behaved like this, or is it really the responsibility of my management, my board to go ahead and see this? Any one of you?
If I take it from the company's viewpoint, then I think the quality of their other vendors or customers or whoever they're interacting with a third party becomes a critical issue. While you may not get into the entire third party's processes, you will get into those processes where you have an interface with the third party. So if I were to look at it, I would be worried about a vendor who is not following the process properly for my interface, because that gives scope for a kickback. Or I would get worried with a customer who is not following my process, because that probably gives scope for teaming and leaving. And these things don't happen, right, only from internally. You need the other party, you need two hands to clap. So I do believe that that's an area of concern for anybody, because you are evaluating, if you take a customer, when you are evaluating creditworthiness, credit risk, in many which ways you're evaluating whether you will get your money's value back from it. And when you're evaluating a vendor, you're trying to ensure that you get quality of your goods, you don't end up with shortages, because if I were to have a vendor who's not a good vendor, he could regularly give you shortages. And because your system says that, up to 5%, 10%, I just treat them as normal transportation losses, where you may neither proceed against the vendor or against the insurance company, you actually have a vendor who could be dishonest to you. So you would definitely look at your processes for every aspect where you're having an interface, because there is scope for loss of money or leakage. And your responsibility is safeguarding of assets which ultimately will move to cash.
Very well put it, that to the extent that the processes are related to your own organization, it may be relevant to look into this. An example could be, which I pick up from my industry, like on the labor law side. Nobody less than 18 years of age should actually be employed on the site. Now, we all know when there is a lot of poverty here, people who are even younger, sometimes off to work, but you need to have this mechanism to identify that nobody of this below 18 comes on the site, because it not only puts a risk on the contractor, but also as a principal employer, you suddenly become responsible. So, to that extent, where you want to follow certain key rules. Example is on this child labor on Nike shoes and all that we heard about, those kind of things. So you have to be mindful of what is impacting you, because there is another leg of a transaction which is with your customer, who also possibly looks at governance in these matters and looks at your organization as someone as a model organization to work with. Because you have a chain, it is not just my relation with my vendor, but when I have a vendor, I am also a vendor to someone. And the whole chain has to be looked at, and the relevant gaps needs to be plugged. Otherwise, there is a mismatch and it could lead to some issues which could be legal, which could be social, which could be any impact which may not be desirable.
Say, I think one important point that my group especially looks at it is, we have in fact at senior level, at our board level, at our group level, we have something called brand ambassador and the group ethics counselor. I think ethics is a word, is not defined anywhere in any of the laws. It is implicit in everything that we look at it. And I think in that context, I always say that there is a possibility of this being misused or used appropriately as the management wants to do it. I've seen so many people, and it's something which is not acceptable in my group. There will be some groups who will say, if the result is achieved, means to achieve them are all considered to be fair. And ethics-wise, there is no issue. That is the way they will put it across. There are so many people who make you very clear, I don't bribe. Yeah, my consultant is there who takes care of the work, and I get everything done on that account. These are all ethics-related issues. So I think the tone in the top is also very important. Unfortunately, nowhere in this particular thing, and that's global practice. Laws don't talk about it, that is considered to be implicit. So in that context, I think IFC has to be looked at it from that perspective. It is all invisible in that, but it is very much present in that particular part. So how one defines it, it all depends, revolves around tone and the talk. This is my person.
I think I agree with the points made. I think if it's compliance, it impacts compliance, it impacts ethics, if it impacts any elements of financial reporting or fraud, or if you're working back with someone in the back office where you have shared services environment, you have outsourcing IT, outsourcing payroll, other functions, I think then you need to think of what are the sets of expectations you'll have from them on the SOCR part of it, so that you can get comfort on what sets of internal controls they have.
IFC in terms of definition also goes into efficiency and effectiveness of conduct of business. So in many which ways where a parent entity is dependent on ancillaries, where the ancillaries outputs become its just-in-time input, they are very concerned about the process of the ancillary also, because that's the only way that integrated supply chain will work. So the processes from a conduct of business may extend to your ancillary as part of conditions for you to be a supplier or a vendor.
It does become quite integrated in that sense, yeah. I come to the benefits part of it, in the sense of all this reporting happening, we give the reporting, the company makes decisions. Do you, all of you all perceive that this would, let's say, help increase my credit rating, it help reduce my cost of funds? Because we've had discussions and deliberations with clients where when you're talking even of a small adverse comment in car, forget even a modified opinion, they will say, no, don't put this, my credit rating gets impacted. So now, the flip side, if everything is really nice and proper, in true spirit, reported nicely, do you feel that the fund providers and the rating agencies will look at it favorably?
I think it's too early to say, to be honest. But I think there is one positive outcome of the result of what we do. It will instill a sense of better confidence. I'm not saying it will change the rating, but it will instill a sense of better confidence. For example, any organization for that matter gets a clean report on all the aspects, true and fair view plus on the internal financial control. And you have, and this is a serious organization, a large size organization, let's say, and you have an equally reputed audit firm which confirms all of this. The comfort level of the guy who is reviewing your, supposed to be reviewing the rating, to give you ratings, will always be much better when compared to when he sees a report which is qualified to the extent of certain items. So, you know, it's too early to say, but I don't think it will result in that, but the level of confidence could be different. And that is what I would look at.
No, I agree. It's an intangible. To my mind, there will be an intangible benefit, very difficult to measure. But I would go the other way, that if you were to get a foreign investor, right, into your entity, then the chances are bright, because a foreign investor who's probably not spending as much time in your day-to-day management derives tremendous comfort from that, and that can enhance the type of investment he makes. So I would think that is one plus when you look at a foreign investor. The second is, if I look at generally the stakeholder, the shareholder or whatever, apart from the factor of this comfort of management, the factor is there's an assurance of the quality of the system, I do believe will dictate, right, the way he probably deal with with the shares of the entity. So that gives him that confidence. But I think, yes, it's an intangible. But where I do see money, right, is from a foreign investor.
Just to add on to that, there are companies like us which are quoted on under SOX 404. We need to file our Form 20F. 20F is like, you know, the authority of the company. It talks about everything. Similarly, people who go at regular intervals to the public at large, prospectus is something which we update. I think a lot of information is already available in these kind of things. I think proof of the pudding is in eating for the next 2-3 years. If something connected with IFC, if it comes in these kind of statements, I think then we will know the effectiveness of it. So that is what Mahesh said, that I think we'll have to wait for a while to see how effective it is. Otherwise, it should not become a commoditized material that you have a management letters which are almost routine and regular kind of things, and the auditors are testing everything on that account. So I think we'll have to wait for that.
My sense, I don't see it having a huge impact. That's a very personal sense. Although there'll be some people will be running the analytics on with how many companies have had material weaknesses reported. We saw the, I think the compensation data for the first time, I think, getting published. So you had lots of people writing about it. I don't think, and when I speak to my colleagues on transaction side, I've never seen controls as a topic, which either breaks a deal, gets the deal, or impacts valuation. And not just in India, globally. So I think it will be, and you see the PCOV side, I think all of us as auditors are named and shamed so many times for the way we've not done things right. And I think a lot of data is available. I don't see that as something which is going to have a huge impact, but it's a lot of nuisance for us as professionals when we will be dealing with corporates, because there's a huge amount of learning which I think everyone will go through in the first 2-3 years. And I think that's the pain I think all of us will have to live through, either on the side of management where we are not educated, or on the side of professionals where they are not educated, or on the board side where we all need to get them aligned. So I think the alignment process around it, because you will always have some reactions, and that worries me more than anything else.
I think we've got some excellent thoughts which have come across the last, almost 2 hours. I'll now keep it open for the floor. I would request questions to any of the panelists, and if any of you want a specific panelist, including Asmukh and myself, to react, you can please say so. We can have the mics to be circulated.
I think when we say IFC, for financial reporting, we mean financial statement only, or even the MIS. I think Sairam mentioned somewhere that even financial reporting will include MIS. Do you really need to, seriously feel that we need to, as an auditor, get into the controls behind the MIS?
No. For the financial reporting which an auditor is involved in, that's only in terms of the year-end financial reporting process. But the process which works is supposed to work in terms of getting out timely financial information, which includes interim financial information. Okay? So technically, if I'm a listed company, right, the process of my getting out my quarterly results is also getting covered by the same process. But you don't go and report on an ICFR in the quarter. And to draw that, and where I was drawing up on the issue of MIS is, a lot of MIS in companies, they do not run 2 parallel systems. MIS is drawn from the same books of account. So, if your financial reporting system is good for your interim reporting, which is good for your year-end reporting, automatically the quality of MIS is the same, because nobody runs 2 parallel MIS. That's all I'm saying. So that is more of an information, right? What is financial which flows? From an attest angle, it's only the year-end one.
I think Mr. Rohit mentioned about the scope for ICFR and what should be included as part of the scope. From what I understand, each of the other risks other than financial risk is also a subset of the financial risk. Whether I have a compliance risk or a reputation risk, indirectly it will have an impact on my financials. How then do I draw a framework or a boundary on what needs to be included under the scope of ICFR and what needs to be excluded?
So we go through the scoping as well, the way it's come out in the guidance note, and the way it's always been done is trial balance is your starting point. So you start with your general ledger trial balance. All you try and do is you map it to processes, because your controls always reside in processes. So if it's something to do with your expenditure, you will map it to your procurement, it will map it to your payables. So this is how you try and do it. Once you get it into the process, then you just look at what are the sets of things that can go wrong from a financial reporting perspective. And you look for the controls for mitigating those specific aspects. So, and I think the guidance note is really well drafted and detailed to actually take you step by step with what you should be doing and what's the starting point for you. So if you use trial balance as the basic place where you apply your materiality thresholds and you come up with the captions, you look at which processes actually these numbers get impacted by and what aspects of that process and controls impact. As I gave the example, I think planning of procurement will have a financial impact because I'm buying the wrong stock, but that's not financial reporting per se. So I think that some of those things you just need to remember as you're doing it and always think of from a control perspective, what's the type of risk I'm trying to mitigate.
Just going by an example, so if I'm looking at a procurement process, and the price discovery mechanism of having multiple quotes from the vendor. So if a company has bought a particular material without obtaining multiple quotes, and I know as an auditor that it's been bought at a higher price, is it part of ICFR or part of an internal audit scope?
So now I'll get a little technical. Before COSO 2013, this was not a financial reporting issue. So when we did the first round of SOX documentation, getting multiple quotes was not. Why did it get into post COSO 2013? Was because fraud risk was also given and made part of internal controls. So when I get 3 quotes, the only thing that I'm trying to cover over there is the fraud risk aspect of it. It's got nothing to do with financial reporting.
And you need to supplement this by way of justifying it in order to say that though the decision was taken to L2 or L3, what was the reason? So I think it's more revolves around documentation part on that particular part, rather than, I don't think anybody is telling you to change the business the way it is. Have a look at it, have some sense in that, and do some sane analysis, and based on that you do it. And this what you document, that's important.
Thank you.
If there is a adverse comment on the internal control process, as an auditor, do I need to quantify that and its impact on the financial reports?
Okay, see from a control angle, right, is that if you see the way the reports are worded, you would probably say that you're giving an adverse opinion or a qualified opinion on the failure of a control or lack of a control. And then when you're doing that, you're saying that there is a possibility, either you believe there's a possibility that there could be a material impact of that. However, your financial statements could have already identified it and rectified it. So you could end up where you're qualifying it for control weakness, but the leftover impact for the year is nil because you dealt with it in the financial statement.
See, if it is already taken care of, we are not going to improve that as per guidelines.
No. There's a difference. You see, you will not include in your control reporting if the control was mitigated and was effective as of the balance sheet date. Or because a lot of year-end reporting gets done after the balance sheet date, if it was part of a control over year-end reporting. Okay. But if it is beyond the year-end reporting, which is where Rohit was mentioning, let us say that you as an auditor came around and you discovered an error of 1 crore. Now, you would have adjusted the financial statements to rectify the 1 crore. Now you're sitting back and saying, what went wrong? Why did this error of 1 crore occur? Now, from their financial reporting control process, they should have either prevented it or detected it. They failed in both. Now you assess saying that the failure, that means resulted in either a control not existing or a control was existing but was not well implemented. And that is why this 1 crore slipped the two lines that he talked about, line 1, line 2. You picked it up. So therefore what happens is you qualify for the purpose of the control, but your financial statements will be clean because you rectified it. It's true and fair still. In fact, that is why, right, you're also required, if you see the audit report format, required is when you report on the quality of on the internal ICFR, you're also supposed to give correspondingly what was your report for the financial statements. So you could end up in 2-3 scenarios. You gave a clean on internal control, but you qualified your financial statements. You didn't give you qualified your internal control, but you did you didn't have to clean your financial statement. Because the cause of qualifying the financial statement could be something else, nothing to do with control. Right?
Mr. Sairam. Mr. Sairam.
Yeah, please. Yeah.
This way. Yeah, sir, I'm practicing chartered accountant.
Yes.
And since you are also CA, my small request to you, why don't you design such program which educate the corporates? Because we chartered accountant will acquire the knowledge by attending seminars, by reading books and all this. But management, sometimes they feel that we are running a business, so we know everything. This is the biggest lacuna with them. They don't understand many things, and they are under the impression they understand. If you design such program for them, how to implement such things, because they say they have money, they have the power, they give the post to director by the DSC, because they put father by director, they are now director, like Rahul Gandhi. He is leading Congress. He is son of Sonia Gandhi or Rajiv Gandhi. Like that, the management are learning nowadays. So why don't you design such program for management? They learn, they understand the IFC, and then our will be easier.
So I think
I'll take this. In fact, sir,
And last bit, and you put some focus on cost also. Because our institute talks always about our duty, already duty bound. But when the cost, when the money, no fresh is coming in practice. Always said no alternate to go somewhere else. They are remaining the practice, they have to remain the practice. There is no cost, there is no fees. IFC, IFC का हमारा cost तो दो यार, वो कौन देगा? You work on that since you are leading the institute. So I requesting you. ये professor मर जाएगा साहब.
I'll take this question, sir. I mean, in all earnestness, this particular committee of the chamber, which has designed this particular program, and the activities which are done, is a corporate members committee. I mean, half the people over here are corporates. Half the people are in practice. That's the statistics which we have. And the purpose of this program itself is to create awareness that this is not just a mere requirement. And that requirement, as we heard even the two industry panelists say, that yes, that there are people in the industry who are willing to commit time and resources for this. And those time and resources would include fees of the auditors. I mean, nowhere it will be a fact that an auditor will not be paid for what he is required to do. I mean, I'll take you back to 1975. I was in school at that time. But I'm very sure when 1975 Caro came in, audit fees would have increased. 1988, 2003, when I have seen Caro undergone a change, fees have increased. So that's a function. It's a function. I think let's not go into our fees or somebody else's fees for that matter. Here we have to look at a process which is there. And I would be really thankful to the chamber of having even thought about this kind of a mixed program of 50% corporate attendees and 50% of the profession. Any other question?
I was asking about CFS.
Yeah, CFS, ma'am, what is required over here is like Caro. I know you're from the insurance industry where this Caro is not there. CFS reporting would require to consolidate the IFC reportings of the component auditors wherever they have reported. But let's say you have an international subsidiary where this doesn't apply. It's set up in an entity where either it may not be subject to audit at all, and you are getting it audited only for the purpose of Indian consolidation. B, it might be subject to local audit, but it is of a threshold level lesser than where internal financial control reporting is required. Or 3, let's say in a situation where that subsidiary itself is a material thing where it would have crossed a public interest threshold and this reporting is required. In all these 3 cases, in the first 2 cases where there is no reporting of the international subsidiary, the consolidating auditor or the directors over here would not have to, the consolidating auditor I'm saying, would not have to talk about it. Where there is a reporting done by the local auditor, then that has to be consolidated. That's from the audit angle. But from a corporate angle, where the directors of a parent company are making a statement that I have controls in place and they are reporting it, they are operating effectively. My personal view is that that sentence, in a sense, doesn't get restricted to the stand-alone entity. It would, in a sense, reflect to the entire group. Perhaps wordings would be coined as Mahesh said sometime, that wordings would be coined to bring that, saying that this wording is only for the standalone, the parent entity, and not for the corporates. We'll have lawyers getting into play and everything and coming about it. But in essence, I think it would apply to the entire group, whether there is a reporting requirement or no reporting requirement. Any thoughts on this? Because both of you all have it. I mean, all of you, any with international experiences.
This is actually a complex topic that we need to look into. I mean, we are not really explored it in details, and we are talking to consultants on this topic as well. We have international subsidiaries as well, so we have our own set of challenges. It's very difficult for someone sitting on the board in India to have a view on an activity happening in Ethiopia. So you have those challenges. Today, honestly, I don't have an answer to this question.
So my question, Ashutosh, what if that entity component is an LLP or a partnership firm?
Today,
Yeah.
in Indian entity,
Yeah.
it will not apply to that entity, and so it doesn't get covered because this reporting
So
requirement
we
is for a
practically
company.
follow what we have taken the
Stand for
for.
cars. Yes. Yeah.
Let's suppose I have a qualified opinion in my, control reporting. When I'm filing Form B with the exchange, do I need to include that qualified opinion as well in my filing Form B, or I need to exclude it?
We'll have to wait till the exchange tells us what is to be done.
Okay.
As of now, exchange form A and B is talking about on the true and fair view. Till clarification comes in, I think we should stick to our opinion on the financial statements alone and not go on this.
The second question is that, in the guidance it talks about that the reporting on the control is not required for the interim period. It is only required for the year-end audit purpose. Now, they go ahead and say that if you have any observation in the preceding financial year, even in my interim report also you need to mention a fact about it. So what is that logic behind the report?
No, I don't think it's mentioning a fact. What it says is that if let us say you qualified your ICFR reports for the previous year. So let's talk about March 16, the first year. You qualified March 16 ICFR report and you come to June 16 quarter. What you need to see is, what was it that you qualified in March 16? The implications of that, whether that control aspect has got remediated. So if it didn't get remediated, it could impact your results for June 16. So what it does is it tells you to consider those qualifications when planning your review processes for June 16. It is not that you do a reporting for June 16. So because you identified a control weakness and you qualified it. Now unless it's remediated, so it should have got remediated, right? At least by the time you get your results for 30th June. If it did, your results could be erroneous. Then what you would do obviously is, knowing that there was a control weakness, you try to find out whether it generated the errors and you ensure that you pass this rectification entry. So you're essentially being cognizant of a previous year's qualification.
Is it applicable? How it is going to affect section?
It's applicable to all companies, so it applies.
I think that's the
Last question. Yeah.
Okay. So basically, one of the factors that the framework, both COSO as well as SOX, contains is about communication of all the processes to the employees. Now, in case of large entities, for example, Tata Motors or Tata as a group, we have TCOC, wherein the employees are made to fill in the forms with the help of actual case scenarios. But in small and medium cases, medium enterprises, the management itself doesn't think that that is important to communicate to the employees, and then they justify saying that we have a shared folder wherein all the policies are put in and we expect the employees to read it. So how as auditors are we supposed to audit the fact that the practices are communicated where to the employees?
There are two things. One is that if it has been uploaded into a common shared service file, then you can go and get access to that to confirm it is there in the shared service. And the second thing is that as a verification process, you're supposed to do a combination of inquiry. So you could go around interviewing a couple of employees to find out whether they are aware of such information. And two is, if you want, you can test them of their awareness by asking them a few questions.
Okay, now the first thing that we saw that it was uploaded on a shared drive, so that part was covered. But second part, as in we couldn't interview the employees because they were on the field. So
that is in audit there's a question of planning the audit, nature, extent and timing. So we have to manage the timing.
Absolute last one because you're running really behind time.
From what we understand so far, IFC or ICFR is more of an extension of internal audit. Now, because it's a lot of documentation on how these controls are effectively documented to demonstrate that it has been done. No? So, because how do we really differentiate between internal audit and IFC?
I think I've been the internal audit practitioner, so as I'm from industry, let me tell you, I think he's talked about first line defense, second and third one. We are all part of the third line defense. The documentation, etc., has to be done by the business very clearly on that account, for which the process SOPs need to be defined on that account and they need to implement it. And audit is a mechanism to review that particular part. So to that extent, it's not that we will not cover 100% of that particular thing. So it may happen for the next 2 years, I may not look at all the SOPs. Whatever that I'm taking it for review, only those things I will review it. So there will still be many SOPs which I am not going to review for the next 2 years because I have a 3-year revolving kind of plan. It will take me 3 years to complete that particular audit universe. So the business has to do that particular part. Audit will just do one more checker kind of things, and the makers have to be from that first line of defense, being nicely supported by the second line. That's what. In fact, if you put internal audit and statutory auditor responsible for it, it's a recipe for disaster for that company.
In fact, if I may just intervene, right? Internal audit is a proscribed service in section 144. So you can't have a situation where you're reporting under 143 and you're proscribed under 144. Right? So it's obviously not the same.
Because when you look at the documentation around ICFR or IFC related requirements, you have your control process narratives, you have your risk control metrics, these are more or less in line with the documentation that we generally would have in place for an internal audit function as well. So are we not duplicating a lot of activities when we are doing internal audit and IFC both?
I mean, given the overlap, I don't think it's a duplication. I mean, the objectives of two are completely different.
I think I must say that, in fact, the audit committees today are in fact looking at all these dots as I told you. They want a statement or some sort of they want to see the body language, they want to see what kind of statements are made, and they are coherent with each other on that account. They would like to talk to CEO, they will talk to the business people separately. Number of times what we call in-camera kind of meeting. We have one-on-one meeting where internal auditors meet separately, stat auditors meet separately. They ask the same questions to 5 people to get that kind of thing, whether they are talking sense or not, and this is their job on that account. So if you are asking me, maker and checker is necessary, and this is the way they get that perspective. So I think, in fact, if you get questioned as statutory auditor, I get questioned on the same matter, and we are talking the same language, they get comfort out of it. So this is what I said. IFC, as we rightly said, whatever that IFC, whatever that we are talking about, it's more a documentation thing. I think we were doing it all the while. Now, as he rightly said, you require for that POSO related part, the fraud risk assessment, you need to justify it. So we are now putting the documentation in place, and this is what our friend who spoke about in the morning. I mean, the beginning with he talked about that thing. We are not documentation oriented society. We need to move towards that, and that's the message for all of us.
Well, thanks to all the panelists, Rohit, Nagesh, Mahesh, Sairam, a candid confession over here. This is the first time ever I have done a panel moderation like this. As I said, in the streak of madness, I said yes to Paras when this topic was getting discussed. I mean, but I'm glad I did that. It has been a wonderful past 2 hours, and I think I'd like to just sum up the learnings which we had. I mean, one is, given the fact that this is law and we got to abide by it, the entire thing revolves around a GRC concept, governance, risk and compliance. I mean, this is a subset of that, and it would really reflect the tone at the top for a proper and successful implementation of IFC. I'd just like to share with you, in October 2015, that is just last week, the PCAOB has come out with a brief for its inspectors. It comes out regularly with such things. And one of the things it has told the three most critical audit deficiencies noticed are: one, reporting on internal financial controls. The second is on evaluating the risk of material misstatement. And the third is on auditing of estimates and fair value. So this really is right at the top. I mean, how do you really look at this entire IFC and give a comfort level? Again, as Nagesh said, it's a documentation thing. Maybe as auditors, as practitioners, we'll have to document it and take it ahead. And lastly, I mean, before I hand over to Hasmukh, I really feel the way Company Act 2013 has got implemented, I hope, my hope is still not gone, is that over the next few months, perhaps MCA will come out with an exemption for small companies. I mean, this entire requirement, as Raghu also said and all people over here have said, is for investor protection. And if in a small enterprises my investor and my executor is the same, he really doesn't need a certificate or anyone else that those controls are working fine. So let's hope that some sense prevails and we get a nice threshold. I wouldn't say a complete, it's only listed entities and all. There are a lot of private companies with huge size. Those get covered and not the entire thing. And with this, I give it to Hasmukh.
Friends, in the beginning, before handing over the proceedings to Ashutosh, in anxiety of beginning the discussion fast, I forgot on a very important duty cast on me. That was appreciating the efforts taken by Ashutosh himself. Though he mentioned first time, but the way he conducted, it didn't look like as if he's a seasoned somebody who should be doing such programs on a times now. Without the shouting of Arnav. May I now request President of the Chambers, Avinash Ji, to hand over the memento as token of our appreciation to Ashutosh. Friends, only one small announcement that entire video recording of this would be put on a website of a chambers. Those of you who want can take benefit of that. Yeah, Avinash ji.
Friends, I must congratulate Chairman Paras for organizing this event actually. Ashutosh is Sachin Tendulkar of our chamber. Give a big hand to him. Always plays a great role in this committee. Ashutosh, I think I know him from last 15 years. When I introduced in the chamber, every time I hear that he don't have time. But today, I think he has spared the time for this event. Thanks, Ashutosh. We are looking forward, and I thank all the panelists for being with us. Thank you, and I look forward to see you again and again.